Crazy time for gold and silver and really just about every other single thing. It's hard to find much we know for sure, but I can think of at least 4 things that do make sense. 5 if we include needing a nap. If you're wondering what's happening with gold and silver prices today, well, I think we need to start with a quick truth. Nobody knows the direction coming out of Wednesday's news. You drop a paper plane into a whirlwind, you're going to get some guesses on which way it comes out, but I wouldn't bet on any of them. We know a few things though. Some of the tariff uncertainty is gone now, and uncertainty was pushing prices up a little bit, that's obvious, but we got more than that. And what we got does affect gold and silver prices. Regardless of whether we can isolate that, we can say gold and silver are going to do this one thing based on what we know now. We can't. That information that we did get is relevant to overall price. And overall price is going down if you're not aware. That's why this is important. So let me give you 3 things that might explain a little bit of this. We're going to come back to each of them. I'm just going to run through them. The first is that bullion was exempted from tariffs. The second is that the arbitrage price variance from COMEX and LBMA has dropped to right around $20. And then third is that COMEX warehouses here in the States now hold 2.5 times the gold and 1.8 times the silver that they had prior to Trump's election. We're going to get into what all this means. First, let me give a quick shout out to channel sponsor Summit Metals. If you're looking for gold and silver, well, by now you probably know they're a great place to get it. SummitMetals.com. So those 3 things again: bullion exempted from tariffs, arbitrage price variance from COMEX and LBMA dropping to $20, and COMEX warehouses now holding way more gold and silver than they did previously. Well, that's going to have an impact on price. Now, there's no way to say the uncertainty is gone, at least not with a straight face, but we knew about the scramble to move gold from London to New York. That was adding a tailwind to gold price, and the benefit of doing that is no longer an acute thing. The uncertainty on tariffs affecting foreign gold or silver, well, that's gone. There's no longer a rush to get gold out of London and into the States. The purpose was for arbitrage, where gold is worth more in the COMEX than it is in the LBMA. And going from reports, we now see 4 years of typical gold and silver demand currently stocked in COMEX-approved warehouses. So a short-term drop in price for both metals makes sense. Now, let's get to why I have the silver on the desk here. There were lots of people telling us that silver was the play. Gold to silver ratio was too high, gold was too expensive, silver was too cheap. Well, I'm going to tell you why that advice made absolutely no sense to me. But first, let's lay out at least a little bit of the argument and pick out the parts that actually do make sense. If you look at the charts of past spikes in gold price, you're going to see that silver skips a beat and then it passes gold up. I'm going to hold the charts. Other people are going to show it to you, I'm sure. We'll dive back into it when it becomes relevant. But basically, it works like the drafting strategy from Days of Thunder. 2 of you are going to get that reference. Gold paves the way, pulls silver along with it, and then silver slings past it. Checkered flags. Now, the problem this time is that the big stories for gold, the central bank demand and the LBMA to COMEX arbitrage, were very specific to gold, so silver didn't have that slingshot. I'm going to let the chart show the story here so I don't get that one guy yelling at me in the comments. We can see silver slingshot past gold in April of 2011. This is both the concept and the proof that some people will use that this theory makes sense. Now, I'm not going to tell you this hasn't happened historically. It has, but there are a few reasons the people telling us to focus on silver rather than gold in 2024, and again this year in 2025, have been wrong. Again, let's let the chart show this. It's not a feeling, it's actually something that's happened. You can see that gold has outperformed silver in 2024 and again in 2025, despite all the advice that it wouldn't. Now, I've already explained why the big catalysts pushing gold up, like central bank demand, haven't applied to silver. Now, that's not to say this phenomenon won't happen at some point in the future. It's just to say that this is the reason that I haven't thought it would happen yet. So this video is about trying to make sense of things that are kind of hard to make sense of at the moment. So we're just going to have to pick and choose those few things that do. Gold is falling on more than just liquidating a strong asset to cover the losses on a weak one, and silver is falling harder because it lacks the tailwinds that gold has had. It also has the headwind of industrial demand right now with the possibility of a global recession. So if you're following anybody's advice to buy silver because of the gold to silver ratio, well, the smarter play is going to be to wait for a situation where macro factors are affecting both metals. Now, I'm not a financial advisor, but like I've said for a few years now, we haven't been seeing that. The reason, though, that you see bigger moves in the silver market, if you look at the charts, is because the market cap for silver is 1/10 the size of the market cap for gold. So if or when capital does flow from gold into silver, say at a perceived top, well, it has a bigger impact on silver. And this is why we see those big moves for silver on the historical charts. It's not because the universe demands a certain ratio. So pretty straightforward. The thing to look for wouldn't be a certain ratio, it would be a reason. Last year, with central bank demand pumping gold, we didn't have that reason, at least not a reason that silver would outperform gold. This year, so far, with this continued central bank demand and the LBMA to COMEX arbitrage, well, we haven't really had that reason either. Now, going forward, we might. What I would be looking for, though, as a reason to buy silver would either be a strong potential for it moving forward or a reason for it to fall, like some kind of threat of a global recession. And coincidentally, I guess we're getting that right now. You know, industrial demand impacts the price of silver, so the GSR, that's a red herring in situations where you see big drivers for gold price like we saw in 2024 and so far in 2025, but that wouldn't mean a drop in silver price wouldn't be interesting. Silver price crashing would be interesting to me in a way that the GSR spiking would not. A spike in the GSR can mean different things, but a crash in silver price, well, there's not much to analyze. So let's sum it up. Gold price is dropping, and if you consider the 3 bits of information I mentioned at the beginning here, well, it makes sense that it is. Silver price is dropping more, and that makes sense too. The threat of a global recession is going to affect silver price. So far, so good. Well, now we get to the gold to silver ratio, and we see that that's widening. I know that people are going to be out there once again saying, this is your reason to buy silver, and I would just say that's the part that doesn't make sense. At least not right now. Not so far this year, not last year, and not any of the past 14 years. The ratio is above 100. So we're going to see that advice because 100 is a big number. I would just say ignore it. This is something that might be meaningful in the future, but it's not meaningful yet. $29 silver, that might be your reason to buy. Maybe you wanted anything under $30. Well, that makes sense. A GSR of 100, though, is just a data point. So there we go. We can see a few things driving gold and silver price down, and hopefully we know not to read too much into the GSR. There's lots of noise out there and not much signal. It's probably best to just take a few days to get a better picture. So let's call it good there and head to the comments. It's crazy time. Let us know what you're up to. Are you buying that $29 silver, $3,000 gold, or are you just a little bit punch drunk, seeing stars? Let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.